And let's take a look at the size of some of these markets to help us get a better idea what has led to the multinational corporations we see today and who some of those largest players are. Here we see a visual diagram of the overall global stock market measured as market capitalization. Market capitalization is the full value of all of the outstanding shares of equity for that company. So if we were to sum up all of the outstanding shares, the value, that market value of those shares in the US, we see that the US actually makes up 42.5% of the overall global market. In textbooks and everything else, it sounds as if we're very US-centric in our perspective, but in finance, it's very much the case that the US makes up such a large portion of the overall global capital market that it's worth focusing on. And we saw in 2008 with the financial crisis that there was a lot of contagion or spread of risk into other markets. And our housing market here in the US caused a global financial crisis because of that interconnectedness and the size of the US markets. So globally, there's almost 8,000 companies that are listed, and that's worth close to $100 trillion. You see the US makes up about half of that as far as the number of companies as well as the size of the market cap. Here we have a list of the largest companies in the world by market cap. Apple and Microsoft sometimes will change positions there at the top. And note that out of all 10 of these companies, 9 of them are located in the United States. The only one that's not is the third one there, the Saudi Aramco, which is the oil company owned by the Saudi Arabian government. So you may have heard of the term S&P 500. And what this refers to is the largest 500 companies listed in the US on the New York Stock Exchange and the NASDAQ. These 500 companies, we saw total in the US, there's around 3,600 companies. These 500 companies make up the lion's share of the whole market. In fact, they account for 80% of the entire US stock market capitalization. And then out of these 500, 10 of the largest companies make up 30% of that index. And this is dominated by tech firms, what we refer to as FANG stocks. That term was coined by Jim Cramer and stands for Facebook, Apple, Amazon, Netflix, and Google. But we've seen that acronym change over time. Now we refer to it as FAMG to include Microsoft. That was the largest company in our last chart. And this one is relatively new to me, but I like it. Mama stocks. Now that Facebook is Meta and Google is Alphabet, we've got Meta, Apple, Microsoft, Amazon, and Alphabet. And the size of these firms, it's a large portion of the S&P 500 as well as the global stock market capitalization. Now let's take a look at how that compares to private equity investments. So here, if we look at total assets under management, the third line down, we see that total assets under management were around $500 billion back in 2005, doubled to $1 trillion in 2012, and then again to $2.7 trillion, or more than double, by 2022, almost tripling there. Now, this represents private investments and not necessarily the total market cap of the equity that's invested in these privately held firms, because then that would also include, a lot of individual owners, family offices, and we can see that a little bit in this next chart here. It's split by different asset classes within the private investments market. And the ones that we're concerned with here are the private equity and venture capital. Those represent pure equity investments, so we could compare that to our overall capital markets. And let's just take 2022, their total private investments there of $22 trillion, and we can compare that to, the overall market capitalization of the public markets of $100 trillion. So it's about a fifth of the size. Now note here in this chart that it also includes privately held debt. So whereas before we were looking at the market capitalization of publicly traded equity, and here we've also included the debt. If we were to include publicly held debt over here, we can see that total increase significantly. So the public debt markets is dominated by governments, the US government being one of the largest, as well as a lot of other sovereign nations, sovereign wealth funds. And you can see that government debt outstanding bonds there is 87 trillion, and the corporate portion is 41 trillion for a total of 128 trillion. So the total publicly held or publicly traded debt market is significantly bigger than the public stock market. And so to recap, some of the contributors to the rise of large corporations and the U.S. as a leading capital market in the global equity markets are a strong legal framework, regulation, and transparency in the markets, which builds investor confidence that their interests are going to be protected. Large liquid pools of capital help facilitate business development as well as growth. The U.S. has the most developed private investments industry and market, and the U.S. makes up close to half of the global equity market.